12 minutes to the hour, you're listening to Paris Live PM, and yet more Brexit reaction now in Live on Live. Britain has voted to exit the European Union, and that decision wiped $2.1 trillion off international equity values Friday. Now, the world markets have steadied, but things are a little bit different domestically. This Monday, the UK is still trying to contain the fallout. The sterling is at a 3-decade low against the dollar, while airline, bank and property shares are also down. Well, for more on this, we welcome to the studio Michael Stothard, the Paris correspondent for the Financial Times. You're very welcome to the program, Michael.
Pleasure to be here.
Now, let's start off with the measure of the economic aftershock. Brexit, the vote triggered market turmoil on Friday, and things are equally uncertain today. It sounds like it's going to be a tough week. Can we expect further losses, further volatility on the markets?
Well, when you speak to traders in the market, the long money, so the big institutional investors, are still not seeing this as a buying opportunity. They're saying, hang on, hold your horses. Let's wait to see if this gets any worse, because they really, really don't know. I mean, the sterling has already fallen 15%, which is just an absolutely incredible fall to a 30-year low, which really changes the dynamics of all the markets and all the business in the UK. And how the politicians react to this, which at the moment it seems to be in a very confused way, will determine what happens in the markets for the rest of the week. But people are holding tight for the moment.
Sure. So the politicians, it seems, are as confused as the markets, but not all companies on the London Stock Exchange are suffering, are there? It seems to be that those that have a lot of exposure to UK customers, for example, property companies and the British budget airline EasyJet, they're suffering the most. But other companies who do business where their markets are outside the UK are not necessarily suffering.
Yeah, that's right. The worry is that this is going to fundamentally hold back British growth for the next 10, 20 years. Nobody really knows. But if you're, Unilever or someone who operates in a big company, operates in the emerging markets, it doesn't necessarily matter to you that much. I mean, Virgin Money, which is a kind of very local domestic bank, was down 40% on Friday. Which really goes to show the more UK focused you are, the more horrific and the more blood is being spilled on the markets.
So let's have a look at the measures that are supposedly in place to offset the market losses. The Chancellor, George Osborne, said that he'd spoken with the Bank of England governor and that there were, quote unquote, well thought through contingency plans. Now, the big fear following this vote has been that there's been no real strategy for Brexit. So what might these contingency plans be?
Well, I think what they're talking about is measures to continue to provide liquidity to the market. But at the moment, we haven't really seen a layman-style structural crisis. Credit derivative swaps aren't going crazy. What's happening is the sterling has fallen and company share prices have fallen, but it's not a crazy panic which is has contagion for the wider system. But I think what they're trying to signal is that we're not going to let this get too bad. But in terms of what their political strategy is, I don't think they really know. Okay,
so now when George Osborne came out this morning and spoke in an effort to calm financial markets, He did indicate that the UK was in a position of strength. He said there'd be no emergency budget and that the UK is ready to face this crisis. Do you think that his comments this morning have gone some way to prevent a more dramatic market decline?
Not really, I don't think so, because what he said was we're not going to invoke Article 50, this famous clause which after which you have 2 years to leave. So it gives a bit of clarity about the process by which Britain is going to leave the European Union. He said, we're not going to do that until later on, until we get a new leader. So it really creates more uncertainty. Again, when you speak to people on the markets, when you speak to big companies based in the UK, they still have no idea how this is going to play out. And I don't think George Osborne's speech really helped. He warned that there would be an austerity budget just as soon as Brexit happened, because there wouldn't be enough tax revenue, and it was part of a scaremongering tactic to try and swing the vote. So part of him saying that there's not going to be this austerity budget was a response to earlier comments. Him saying, right, we need maybe some fiscal loosening to begin with, and the austerity budget may not come for a few years.
Okay, now let's look at London's status as a world financial capital. Banks in London are permitted to locate themselves in Britain and offer their products and services to the wider EU thanks to a special EU passport arrangement. Now, if this is lost, should we really expect banks based in London to move out of London and to other European cities, and for London to lose this status?
Foreign banks who are based in the UK will probably move operations out. So the US banks are based in London, but they use London as a foothold in the European Union to then trade all around. But if they can't do that, then it's very likely the banks like Goldman Sachs and Morgan Stanley and JP Morgan will move operations outside of the City of London. Sadiq Khan, the mayor of London, said today that this passporting was worth £10 billion to the City of London, which is obviously an extraordinary amount of money. And there's a real risk that they will lose this passporting, and it will probably be devastating for the City of London. The City of London everyone says it will remain a powerful financial centre because the world doesn't change like that. But having said that, I think it will be pretty serious.
The London Stock Exchange says that it's going to press ahead with this £21 billion merger with its German counterpart, Deutsche Börse. Now, unease on the German side has been evident, with calls for the group's headquarters to be based in Frankfurt rather than in London. So what impact will Brexit have on this merger?
I think it has the potential to really wreck the whole thing, or to radically change the terms of the LSE Deutsche Börse merger. Apart from anything else, it was agreed on 45%, 55% terms. It was an all-share deal, and the terms were fixed before the sterling fell 10%, for 15%, and before there was a potential for London to lose its place as a financial centre. So that, at the very least, should cause the voters of Deutsche Börse to want to reorganise the terms. All of the senior people from the deal are saying, oh no, it'll be fine, don't worry. And, behind the scenes, maybe they're saying, well, if there's some reorganisation of terms, it won't kill the whole deal. But it really puts it in question. And the French, just from the Paris angle, are lobbying very hard to kill this deal because they don't want to, have a British, German power player that will be 10 times the size of Euronext. So there's everything to play for in the deal, very much so.
And now none of this can really augur well for the mood in the City of London. Now, there was a leading business group, the Institute of Directors, that surveyed 1,000 of its members and found that businesses in London are very worried. Some of the figures were a quarter of businesses are planning a hiring freeze. Almost 2/3 said that Brexit was negative for their business, etc., etc. So what is the mood in London? Is it a stiff upper lip mentality, or do you think panic is setting in?
I don't think it's quite panic, but I think people are mortified that this has happened. The reality is that it gives financial regulation is set in Brussels and in Frankfurt. So it means that we're not going to have a seat at the table for making financial regulations. So the workers in the City of London are thinking, well, how generous really are the French and the Italians and the Germans going to be in making financial regulation that's advantageous to us in the coming years? And is that going to be good for our jobs? No, obviously not. It's going to be good for financial jobs in France and Germany and Italy and the Netherlands. So they're pretty mortified. Also, the city is fueled by foreigners. It's all the City of London is
some
French.
of whom presumably didn't have the right to vote in this referendum.
No, I mean a huge number of my friends and contacts are French and working in the City of London. There's 300,000 French people in the City of London, and they are devastated on a personal level and on a professional level.
Absolutely. Well, unfortunately, we're going to have to leave it there. We're nearing the end of our program here on Paris Live PM. Our thanks to Michael Stothard, the Paris correspondent for the Financial Times. Thanks for being on the program.
Thank you very much.
See you tomorrow.